Hello everyone, welcome to the fifth lecture of Banking Final Accounts. In the last lecture, we had seen the formats, pro forma, of balance sheet and profit and loss in detail. Now today we will see the schedules, the content of each and every item of balance sheet and profit and loss in detail. So all of you take out your study material, you don't have to write anything in the notebooks. You already have the schedules in detail in your study material. You just have to underline or highlight in the same material which are the important things which you will come across generally in a practical question. So take out your study material, everyone. Before we take up with that things in detail, let us just revise with the formats in brief. Okay, shortcut I gave you, the trick I gave you to remember the balance sheets format, that was cash reserves deposited with Bank of CBI is a finest option. Cash C capital, reserves deposited deposits with Bank B borrowings of CBI, C cash and balance with RBI, B bank balance and money at call and short notice, I investments is A advances, finest F fixed assets, option O other assets. In profit and loss, no shortcut was required because two incomes, two expenses. Two incomes, interest earned, and other incomes, two expenses, interest expended and operating expenses. Then we have provisions and contingencies in which we show provision for tax and other provisions like provision for bad debts. Then we have profit or loss, net profit of current year plus balance brought forward of profit and loss account, and then appropriations, transfer to statutory reserve 25% of current year's profits, and then transfer to proposed dividend, government account, other reserves, and balance carried forward to balance sheet. Now each and every element we will see in detail what all things will come within the same. Take out your study materials, page number 7, all of you. You'll find page number 7 onwards all these schedules in detail. Schedule 1 is capital, okay? In that it is just like share capital. So for nationalized banks, we would simply write the capital, and for banks incorporated outside India, we would write the capital and amount brought in by way of startup capital, amount deposited kept with RBI. We will not have all these things. I have highlighted in yellow. All of you mark that portion. That much only we will have in our questions. Means we will have authorized capital, issued capital, subscribed capital, and called up and paid up capital, in which you will subtract the calls unpaid, that is calls in arrears, and you would add the forfeited shares. So mainly you remember in capital we will have authorized capital, and then as we have been doing in company final accounts, we will combine issued, subscribed, called up and paid up capital. Going further, you can see in your study materials schedule 2 reserves and surplus. So statutory reserve, we studied that 25% balance of profit we transfer to statutory reserve. That we will have capital reserves, security premium, revenue and other reserves. And this balance in profit and loss account, mark it important. That is the last item in P&L statement where we have written balance carried forward to balance sheet. That will come in reserves and surplus. Okay, basically reserves and surplus. Reserves are this first, second, third and fourth item, and surplus word indicates that fifth item, balance in profit and loss account. I repeat, reserves are first, second, third and fourth item, and surplus indicates that fifth item, balance in profit and loss account. Capital reserve, security premium we have seen in company final accounts also, they are exactly same. And in all these reserves, how we are supposed to show them? Opening balance, additions during the year you will add, and deductions means withdrawal from the reserves, we will subtract. Going further, schedule 3 deposits we already studied in the formats itself. I made you write it in bracket also. Demand deposits means current account deposits. All of you write in bracket current account. Savings banks deposits are savings deposits, and term deposits, all of you can write fixed deposits. Okay, so this I already made you write in bracket. Demand deposits means current account, savings account, and term deposit means fixed deposit account. Within that you can show from banks and from others, means if other banks have deposited the money in you, that is in your bank, then also that will appear in deposits, and public who has deposited the money will also appear over here. Then B part also is shown deposits of branches in India and branches outside India. That is just a disclosure. We won't have it in practical questions. Schedule 4 borrowings, borrowings in India and borrowings outside India, within India from RBI, other banks and other institutions. So they are just like loans. Then Schedule 5 other liabilities and provisions will have bills payable, inter-office adjustments. Okay, in inter-office adjustments, all of you write in bracket credit balance. All of you write it in bracket credit balance. Because if same inter-office adjustment has debit balance, it will come in other assets. Asset side. Debit balances come in assets and credit balances come in liabilities. So if inter-office adjustment has a credit balance, you'll write it in Schedule 5, other liabilities and provisions. And if same inter-office adjustment has a debit balance, you'll write it in other assets. Interest accrued or payable and other items including provisions. Include one more item in other liabilities and provisions. I'm dictating it. Write down rebate on bills discounted. I repeat, write down rebate on bills discounted. Okay, that is a pre-received income that will also come as a liability in other liabilities and provisions. I repeat, all of you must have written in Schedule 5 one more extra item, rebate on bills discounted. Then going with Schedule 6, cash and balance with RBI. Heading itself is the content. Cash means cash on hand and balance with RBI means balance with RBI. So heading itself is the content. Two things will come in this, cash on hand and balance with RBI. Going further, Schedule 7 will include balance with banks and money at call and short notice. Here also heading itself is the content. Balance with banks. So balance with banks we will show current account and other deposit accounts within India and outside India. And second item, money at call and short notice, again we will show within banks and with other institutions. In short, heading itself is the content. Two things major will come over here, balance with other banks and money at call and short notice. So that yellow items you can highlight or mark it in your study material also. Then Schedule 8 investments. Now here nothing to highlight because we all understand what are investments. Investments in India may be in government securities, other approved securities, shares, debentures, bonds, subsidiary, joint ventures and others. Investments outside India may be in government securities, subsidiary and joint ventures abroad and others. Include one more item over here, that is gold. If the bank purchases gold, then that will be considered as an investment. However, if bank purchases silver, that will come in other assets. So there's an important difference. All of you write this extra item. If bank purchases gold, gold will come in investments. Okay. Going further, Schedule 9 advances. This also I made you write it in the notebook at the time of formats itself. Three things are included in advances. Advances means loans given by the bank. So that may be in the form of bills purchased and discounted, cash credits and overdrafts and term loans. Other items are just disclosure. How much of loans are secured by tangible assets, covered by bank or government guarantees and unsecured. Again, how many advances are made in India within priority, public, bank and other sectors, and how many advances are made outside India. That is due from banks, others, bills purchased and discounted, syndicated loans and others. Basically, this B and C is just a disclosure. Extra items that will come, that will not be included in the total. Total of A, B and C will always come same. Going further, Schedule 10 will include fixed assets. Now fixed assets, nothing to highlight. We all understand what are fixed assets. Premises means building. Other fixed assets may be like furnitures, fixtures, vehicles, etc. But generally fixed assets are lesser with bank because as I told you earlier also, they generally take the properties on rent. Furniture, etc. may be there. So premises, how are we supposed to show? Opening balance, that is at cost on 31st March of preceding year. Preceding year means opening balance. In that you'll add additions means purchases during the year. Deduction means you will subtract sold premises during the year and then you'll minus depreciation till date. So mainly you'll remember that you have to minus depreciation, other items rarely you will have. And same items are repeated for other fixed assets also. Schedule 11 we will have other assets. So in that inter-office adjustments, all of you write down in bracket debit balance. I told you inter-office adjustment credit balance will come in other liabilities and provisions. Debit balance will come in other assets. I repeat, credit balance, other liabilities and provisions, debit balance, other assets. Then we have interest accrued means outstanding income, tax paid in advance, tax deducted at source, stationery and stamps, non-banking assets acquired in satisfaction of claims. Now what are these non-banking assets? If bank gives loan to anyone and that person becomes bankrupt, what will bank do? Bank will take that person's assets which were hypothecated or mortgaged with the bank. Then bank will sell those assets, and whatever money is recovered by selling those assets, bank will recover its loan, and remaining money they will give to the bankrupt person again. These assets which are acquired by the bank in the process of bankruptcy are called non-banking assets. Now a question may arise with you, then these non-banking assets may be in the form of car, maybe in the form of jewelry, maybe in the form of house. Why they are not shown in fixed assets? Reason, they are not owned by the bank. They are owned by their clients who had taken the loan. Bank is supposed to sell it and convert it into cash. So they are not the fixed assets of the bank, and they are not going to remain in the bank for a long period of time. Bank has acquired those assets because the other person who has borrowed the loan with the bank could not pay the money back. So bank is supposed to sell these assets and convert them into cash, convert them into money. So these non-banking assets, though may be fixed assets, they will not come in fixed assets, they'll come in other assets because they are acquired in satisfaction of claims. Okay, so mark this important, non-banking assets. And further, all of you write down silver. I told you, if bank purchases gold, gold will come in fixed assets, and if bank acquires silver, silver will come in other assets. Further, contingent liabilities. Now these are same what we studied in company final accounts also. Claims acknowledged or against the bank, not acknowledged as debts. Claims against the bank, not acknowledged as debts. That means in simple language we have studied in SY BCom also. Suits pending in the court of law. Means those cases in the court of law for which the judgment is still pending. So they may become our liability if judgment comes against us. They may not be our liability if judgment comes in our favor. So that's why I told you suits pending in the court of law. If you want, you can write the meaning in bracket. Claims against the bank not acknowledged as debts means suits pending in the court of law. Contingent liabilities basically means uncertain liabilities. They may become our liabilities in future. They may not be our liabilities in future. Liability for partly paid investments means if we have purchased partly paid up shares and debentures and held as investments. So if bank has purchased shares of Reliance Industries Limited and Reliance Industries has called out of 10 rupees only 6 rupees, then what is this remaining 4 rupees uncalled by Reliance Industries for the bank? It is liability for partly paid investments. It is uncertain liability. Bank will have to pay that money only if Reliance Industries calls that money before the bank sells those shares in the stock market. So if bank has any partly paid shares and debentures held as investments, then that partly paid shares and debentures uncalled money would come as contingent liability. Bank may have to pay it, bank may not have to pay it, depending upon when the company calls that money. Liability for outside forward exchange contracts means incomplete contracts. I repeat, liabilities for outside forward exchange contracts means incomplete contracts. Those contracts which bank has entered into, agreements which bank has entered into for future, but they are yet to be executed. Okay, so they are incomplete contracts. Contracts are going to get completed in future. So if bank does not execute those contracts or agreements in future, then it may become liability for the bank. That's why I said incomplete contracts. They may become our liability if bank does not fulfill those obligations in future. Guarantees given on behalf of constituents. Make the correction here in your study materials. It's written constitutes. Instead of constitutes, make it constituents. Constituents means clients. So if any client has borrowed loan from other person and bank has given a guarantee, then when is bank supposed to pay that money? Only if that other person is not able to pay. So it is uncertain liability, contingent liability within India and outside India. Acceptances, endorsements and other obligations and other items for which bank is contingently liable. So all these things will come below the balance sheet as contingent liability as the footnote. Now we come to the profit and loss account statements schedules. In that schedule 13 is interest earned. So interest earned may be interest or discount on advance or bills, income on investments like interest on debentures, etc., interest on government securities, etc. Now, interest on balance with RBI and other interbank funds. Now, this all of you mark it important, RBI and other interbank funds. If they use the word interest on RBI and interbank funds, then you write it in income. If they use the word interest on RBI and other interbank borrowings, I repeat, borrowings, then that will come in 15th schedule interest expended. So therefore, I have marked it in yellow highlight, all of you mark it important. If the word interbank funds is used, RBI balance is used, then that will come in schedule 13. If the word interbank borrowings is used, then that will come in schedule 15. And other incomes. Within other income, schedule 14, we will have commission, exchange, brokerage, profit on sale of investment, less loss on sale of investment. Now, all the losses I have highlighted because normally in company final account, we used to show the losses in other expenses, means in expenses. But in case of bank, loss will not be shown in expenses, it will be subtracted in respective income itself. Means you will show it as negative amount in other incomes itself. So keep this in mind. Any kind of losses won't be shown in expenses, it would be shown in other incomes itself as a negative figure. I repeat, losses won't appear in expenses, they will appear in incomes itself as a negative figure. So profit on sale of investments minus loss on sale of investments, same way with profit on revaluation, sale of land and building, exchange transactions, everywhere the loss will get subtracted. And sixth item, other incomes may include incomes earned by way of dividends, etc. from subsidiary or companies and out of joint ventures abroad or in India, and miscellaneous incomes. Then schedule 15, we go with interest expended, interest on deposits. Which deposits? Savings deposits and fixed deposits. Interest on RBI or interbank borrowings. This is what I told you. Funds word means it will come in schedule 13. Borrowings word means it will come in schedule 15. And other interest expenses. In schedule 16, operating expenses, I told you all the expenses like salaries, etc. what we used to debit in P&L account. See that? Payments to and provision for employees, in bracket write salaries, employees means salaries. Rent, taxes and lighting, printing and stationery, advertisement and publicity, depreciation on bank's property, directors' fees, allowance and expenses, auditors' fees and other expenses including branch auditors, law or legal charges, postage, telegram, telephone, insurance and other expenditure. So all the schedules are completed. Remaining items we directly have to show in profit and loss statement itself. Okay. Based on this profit and loss statement and balance sheet format, now we shall be taking up with the questions. So today we take up with the question on profit and loss statement at least, so that you understand the format and items in detail. Two questions will cover in today's lecture. In classwork, I'll be taking up with question number 7. And your homework will be question number 12A. Again, question 12A, which is your university exams question, I'll discuss it thoroughly in this lecture, and answers of that will be uploaded in You Will Learn app. So after you solve that question on your own, you can verify whether your answers are correct or not. All of you take out 7th question of your study material based on profit and loss statement that we solve completely in this lecture. Be attentive. From the following, prepare profit and loss account of Hyderabad Bank Limited for the year ended 31st March 19. Now, only profit and loss statement is asked, so that will include schedule 13 onwards. We have to make schedule 13, 14, 15, 16, only 4 schedules as we studied just now. How will we be doing the markings? There are only 2 incomes. Interest income will mark as II and other incomes will mark as OI. There are only 2 expenses. Interest expense will mark as IE. Operating expenses will mark as OE. Do these markings only so that they don't clash with balance sheet markings. Therefore, schedule 13, schedule number 13 is interest income II. Schedule number 14 is other incomes OI. Schedule number 15 is interest expended IE. Schedule number 16 is operating expenses OE. Okay. So let us first do the markings and then we solve the question. Interest on cash credit. Now be careful. Cash credit is a kind of loan given by the bank. So for the bank, interest on cash credit is an income, interest income, II. Same way, interest on overdraft. Overdraft is also a kind of loan given by the bank. So interest on overdraft is interest income, II. Interest on term loan, again term loan is given by the bank, so interest on that is interest income II. Income on investments, again interest income II. Interest on, now this is what I said to you just now. Now interest on balance with RBI. Mark this, balance important. Just now I discussed with you in today's lecture itself that if they say balance, then you write it in interest income. If they say borrowings, then you write it in interest expense. This is balance with RBI, so interest income. Commission on remittance and transfer, commission will be other incomes. Keep it in mind, for bank, commission is not an expense. Bank charges commission for the services they offer. So for the bank, commission is an income. Same way, commission on letter of credit, other incomes. Commission on government business, other incomes. Profit on sale of building, other incomes. And even this we discussed right now. Loss will be shown as negative portion in income itself. So we will show it as negative figure in other incomes itself. Okay, loss on exchange transactions will appear as negative figure in other incomes itself. Interest paid on deposit, interest expended, i.e. Now interest paid on deposits means bank pays interest on savings and fixed deposits, savings account and fixed deposits. So that interest expense. Auditors fees and allowances, operating expenses, OE. Directors fees and allowances, operating expense. Advertisement, operating expense. Salaries, allowances and bonus to employees, operating expense. Payment to provident fund, operating expense. Printing and stationery, operating expense. Repairs and maintenance, operating expense. Postage, telegrams and telephones, operating expense. Okay, so under these headings they will come. Now adjustments are given. Interest on non-performing asset is as follows. Now we have studied in second lecture, we studied that interest on performing asset is recognized on accrual basis and interest on non-performing asset is recognized on cash basis. Means only the amount which is collected or received must be taken into consideration. However, cash credits interest earned is 820, collected, make a correction, it's not 4000, cancel 10, it's 400. Okay, 10 is to be cancelled, it's 400. Overdrafts interest earned is 450 but collected or received is 100. Term loans interest is 750 but collected or received is 250. Now understand this properly. What are we supposed to do? We are supposed to take only interest collected in our incomes, but in this amount of interest on cash credit 1820, overdraft 750 and term loan 1540, 820, 450 and 750 is already included. I repeat, in the interest of 1820, 820 is already included. In the interest of 1750, 450, okay, that is overdraft, so 450 is already included. And in the interest of term loan 540, 750 is already included. Whereas we are supposed to include 400, 100 and 250 only because they are non-performing assets. Now understand the logic. What are we supposed to do? Okay, 1820 includes 820 only. I repeat, 1820 includes 820 itself. But we have to include only 400. So now we will subtract 420 from that. I repeat, in 1820, 820 is already included, the interest earned. But because it is a non-performing asset, we should have included only interest collected. So 820 is included, but we should have included only 400. How much more have we included? The difference of 420. That extra amount included, now we will minus. Same way, 750 of interest on overdraft includes 450, but we should have included only 100. So extra included 350 rupees we will minus. And in case of term loans 1540, we have included 750. We should have included 250. So extra amount, difference of 500 we will minus. Put tick on all these three amounts because there is an adjustment. So when we come to these three adjustments, from interest on cash credit 1820 will minus 420. From interest on overdraft 750 we will minus 350. From interest on term loan 1540 we will minus 500. I repeat the logic again and still not clear, then you repeat it again by rewinding it again and again. Because it is a non-performing asset, we have to take the income on cash basis. So we are supposed to include the income only which is collected. However, in the books of accounts, we always record all the incomes, whether received or not, whether outstanding or not. So 1820 includes 820, which is actual interest earned. We should have included only 400. So extra amount 420 we will minus. Overdraft 750 interest includes 450 which we have earned. We should have included only 100. A difference amount 350 extra included we will minus. Term loan interest 1540 includes 750. We should have included only 250. So difference amount 500 extra we will minus. This is how we are supposed to give the effect of adjustment 1 in our P&L statement. Now adjustment 2, classification of advances. Okay, in 1000. This will help us in finding the provision which will come under the heading of provision and contingencies in profit and loss statement. Okay, we have studied this also in lecture 2 and 3. Standard assets, others, we will create a provision of 0.4%. You can refer to the summary we had written. Substandard asset, if it is secured, we will create 15% provision. Unsecured, covered by escrow account, 20%. And other unsecured assets, 25%. Okay. Doubtful assets not covered by securities means unsecured. So unsecured means 100%. Doubtful assets covered by securities and for 1 year. So within doubtful assets we studied up to 1 year secured 25%. 1 to 3 years 40%. More than 3 years 100%. Up to 1 year 25%. So here we will create a provision of 25%. And loss assets always 100%. This amount of provision which we find out will appear under the heading provisions and contingencies. We have seen in the format 2 items in provisions and contingencies: provision for tax and provision for bad debts. So that provision for bad debts are these amounts what we have to create. Within standard also, if you remember, we studied agriculture and SME 0.25%, then RERA, real estate and commercial sector 1%, and RA are residential 0.75%, and others, okay, other advances 0.4%. So that 0.4% we have created over here. Okay, you can refer to the summary you have written for these percentages. You must as such remember them by heart. Now how will we solve the question is, very first we'll make the format of P&L statement filling all the items in detail. Then we will make workings of this second item, provisions and contingencies, and then we will make schedule 13, 14, 15 and 16 in detail, and then we will do fill in the blanks in the format of profit and loss statement. So very first of all of you make this format, pause the video and make this format in detail. 1 page format all of you make. Okay, pause the video and make 1 page format. Yes, I hope everyone would have done the formats. So let us start with the things. Very first we will show first item of income, that is incomes. Okay, in that first what will come is interest earned. Second what will come is other incomes. Then we will have total incomes. Then second item what we will have is expenditure. All of you must be writing it. In that first we will have interest expended. Next what we will have is operating expenses. Next what we will have is the heading of provisions and contingencies. Within that we will show 2 provisions, provision for tax and provision for doubtful debts. That is what we are going to find in the working notes. Now interest earned is schedule number 13, other incomes is 14, interest expended 15 and operating expenses 16. Then after expenditure, we will have total expenses. Then third item, what we will provide is profit or loss. Within that, what we will have is net profit or loss. Loss we shall show in bracket for the year. That would be obtained as we have studied earlier, 1 minus 2. Then after net profit or loss for the year, we'll add profit and loss brought forward. Means opening balance of profit and loss account. Okay, that is not given in the question. If given, we would have added. Then we'll again get the total. Then we will have fourth item, that is appropriations. Within that, we will have first transfer to statutory reserve, which is 25% of net profits. We'll see that when we make P&L statement items in detail. Transfer to any other reserve. Transfer to government or proposed dividend. Then balance carried forward to balance sheet. And then again total. So this is how we make P&L statement. First, all of you are supposed to make blank format of P&L statement, putting the items in detail. Now we shall make the workings. Okay, working we have to make for the second adjustment, that is for advances, how much provision is to be created. So all of you give the heading working note 1, and within that working note 1, all of you make this table showing provision required to be shown in profit and loss account. Pause the video and make this table. Assets amount rupees in lakhs. Here rupees in lakhs are not there, sorry, rupees in thousands are there. So all of you write rupees in thousands. Percentage provision, and then again amount of rupees in thousands provision. Okay, pause the video and make this table, everyone. I hope you all are done with the table. Now first, what is this? Standard advances in others category 3000, on which 0.4% provision is to be created. So all of you write down standard asset. Okay, amount is 3000 and provision to be created is 0.4%. So 3000's 0.4%, all of you calculate it. 3000 into 0.4%, that is 12. Then after standard advances in others category, we have, okay, this one is done. Then we have substandard and secured. So 15% provision on 1120 is required. So substandard and secured. $1120, 15% provision is required because it is secured. So 1120 into 15%, that is 168. Okay, I repeat, 1120 into 15%, that is 168. Then we have doubtful assets not covered by securities. Okay, doubtful assets not covered by securities, that means unsecured. You can write in one word, unsecured. Because they are unsecured, 100% provision will be required on that 200 rupees. So 200 into 100% provision, that is 200. Okay, so doubtful, unsecured are also covered. Then we have doubtful assets covered by securities and for 1 year. So all of you write doubtful assets secured. Okay, secured and outstanding for 1 year. Since they are outstanding for 1 year, we have to create 25% provision on that 50 rupees. So 50 into 25%, that is 12.5. Then, so this 3000, 1120, 250 is covered. Now loss assets of 200, we have to create 100% provision. So loss assets and 200 and 100% provision, that will be 200. Okay, so all the items are done. Now what is the total provision required? Count it everyone. 12 plus 168 plus 200 plus 12.5 plus 200, that is 592.5. Total 592.5 of provision will be required. So this is how we are supposed to do these workings. And where will this 592.5 come? Directly it will come in this amount, provisions and contingencies, provision for doubtful debts. Okay, so keep this in mind everyone. Now we will make the schedules, so all of you can make this columns for the schedules, or else directly also if you write the schedules, it's fine. We are not supposed to compulsorily make the format for schedules. Okay, so first schedule number, what we will be making over here, schedule number 13. Okay, that will be for interest earned. So what all items will come in schedule number 13, that is interest earned, as we have marked II items. Very first is interest on cash credit 1820. Write that in inner column because we have put tick on that. So all of you write down interest on cash credit 1820 in inner column. Now from that, as we discussed, we have to minus this. We have to minus this 420 rupees, okay, of cash credit, extra amount which is included, as on cash basis we were supposed to take the items. So from that we will subtract excess on cash basis 820 rupees. So outer column what you will get is 1800. Same way we'll take interest on overdraft and term loan also. So very first interest on overdraft is 750, and from that we have to subtract 350 extra rupees as per adjustment 1. So all of you write down interest on overdraft 750. From that we have to subtract excess on cash basis, that is 350. So outer column will get 400. Okay, same way interest on term loan 1540, and from that we have to subtract 500. So all of you write down interest on term loan 1540. From that we have to subtract excess amount included on cash basis, that is 500. So outer column you will get 1040. Which other items of II are there? Interest on investments is there, that is 840. Interest on investments, all of you write down 840. Then after interest on investments, what do we have? Interest on balance with RBI 150. Okay, interest on balance with RBI 150. So that's it. These items of interest are there. Now total of this schedule will be done. So all of you do it. 1800 plus 400 plus 1040 plus 840 plus 150. We get 4230. Now schedule number 14, what we will be making is other incomes. So let us see what all items are included in other incomes, OI marked items. Very first what we have is commission on remittance and transfer 75. So all of you write down commission on remittance and transfer 75. Then after commission on remittance and transfer, what do we have? commission on letter of credit 118. So all of you write down commission on letter of credit 118. Then after commission on letter of credit, we have commission on government business 82. So all of you write down commission on government business 82. Then after commission on government business, we have profit on sale of building 27. So all of you write down profit on sale of building 27. Then after profit on sale of building, we have loss on exchange transaction, which we have to show as negative income 52 because it's a loss. So loss on exchange transactions will show as a negative income 52. All of you write down loss on exchange transactions, negative amount of 52 in bracket. So all the other incomes items are taken into consideration. Now we will do the total of it. All of you do it in calculator. 75 plus 118 plus 82 plus 27 minus 52. Okay, minus 52, keep it in mind. So 250 would be the total other incomes. Now after other incomes, 15 schedule, what we will be making is interest expended. All the items marked as IE. So very first what we have in that is interest paid on deposits 2720. I'll write down interest paid on deposits 2720. Then after interest paid on deposits, what we have is auditors fees and allowances 120. So all of it on. Okay, there's only one item of interest expended. Auditors fees and allowances would come in other expenses. So 2720 itself will become the total. Okay, 2720 itself will become the total of interest expended. Then 16th item what we will have is operating expenses. Now within operating expenses, OE marked items. So very first what we have is auditors fees and allowances 1120. All of it write on auditors fees and allowances 1120. Then after auditors fees and allowances, we have directors fees and allowances 250. So all of it, directors fees and allowances 250. Then after directors fees and allowances, what do we have is advertisements of 180. So all of it on advertisements 180. Then after advertisements, what we have is salaries, allowances and bonus to employees 1240. So all of it write down salaries, allowances and bonus to employees 1240. Then after salaries, allowances and bonus to employees 1240, what we have is payment of provident fund 280. So all of it are on payment of provident fund 280. Then after payment to provident fund 280, what next operating expenses there? Printing and stationery 140. So all of it are on printing and stationery 140. Then after printing and stationery 140, what we have is repairs and maintenance 50. So all of it on repairs and maintenance 50. Then after repairs and maintenance 50, what we have is postage, telegram and telephone 80. So all of it on postage, telegram and telephone 80. That's the last item. So all the items are covered. Adjustment 1 is also covered in interest incomes. Adjustment 2 we have to show directly in P&L account. Okay, this we have to show directly in P&L statement in provisions and contingencies. It does not come in any schedule. Okay, it does not appear under any schedule. So total of operating expenses will be done. Okay, all of you do it. So total of operating expenses 120 plus 250 plus 180 plus 1240 plus 280 plus 140 plus 50 plus 80 is equal to 2340. So all the schedules are done. Now we have to do that fill in the blanks in the format of P&L statement. So incomes, interest earned as per schedule number 13, we have got how much? 4230. All of you can see this 4230. That will come in interest incomes 4230. Then after interest incomes, other incomes, what we have is 250. So in other incomes, we will write 250. Now total incomes 4230 plus 250, 4480. Okay, total incomes will be 4480. Then as per schedule number 15, interest expended. As per schedule number 15, interest expended, all we can see is 2720. So 2720 will come in interest expended. Then operating expenses schedule number 16 is 3340. So operating expenses schedule number 16 3340. Then provisions and contingencies, provision for tax is not there, so nil. If at all provision for tax was given in percentage, then on what amount you would have calculated? This will be helping you in homework question. 4480, from that you would minus 2720 3340, and then whatever amount remains, on that you would have calculated provision for tax if at all given in the question. I repeat, from incomes you would have subtracted, means the total of incomes you would have subtracted schedule 15 interest, schedule 16 operating expenses, and whatever amount remains, on that 30, 35, 40, whatever percentage provision of tax is given, you would have calculated. Show this calculation so that in homework question you are able to do it properly. And then provision for doubtful debts we have done in working note 1. All of you see what is the provision for doubtful debts? 592.5. Okay, here we have created 592.5. So total expenses are 2720 plus 2340 plus nil plus 592.5, 5625. Now profit or loss, net profit or loss will calculate as 1 minus 2. So total incomes, that is 4480, minus total expenses, that is 5652.5. We will get minus 1172.5. Profit or loss brought forward means opening balance is not there, so nil. So total will be 1172.5. Now appropriations, transfer to statutory reserve will be nil because we have loss. We can make transfer to statutory reserve only if there is profit. So 25% of this, if it was positive 1172.5, we would have done transfer to statutory reserve. But because it's a loss, there will be no transfer to statutory reserve. Okay, I repeat, transfer to statutory reserve can be made only when there is a profit. Transfer to other reserves nil, government or proposed dividend nil, and entire minus 1172.5 will be the loss carried forward to balance sheet. This loss of 1172.5 will be shown in schedule 2 reserves and surplus. Okay, I repeat, where will we show this minus 1172.5 in the balance sheet? We will be showing it in schedule 2 reserves and surplus. Now one question you'll be trying on your own, that is question number 12a. Take out your study material, we'll do the markings, we'll discuss the question, and then answer of the same you'll find it in You Will Learn app. So you'll solve it on your own and verify on your own after you solve it whether your answer is right or not. So now all of you look at question number 12a. You all are supposed to try it on your own, and the answers of that will be available in the You Will Learn app. From following information extracted from the books of Dhanlakshmi Bank Limited, Prepare profit and loss account for the year ended on 31st March 2015. Now, interest on loan for the bank, it's an income. Interest income, all of you mark it as II. Then interest on term deposits. Now, term deposits means we keep fixed deposits with the bank. Bank gives us interest on that. So that is interest expended for the bank. Discount on bills discounted is interest income. Discount on bills means nothing but the interest charged by the bank for giving us the money early. So that is an interest income. Commission, exchange and brokerage, other income. Payment to employees, operating expense. Directors' fees and allowances, operating expense. Postage and telegram, operating expense. Depreciation on bank's assets, operating expense. Interest on cash credit. Now, cash credit and overdrafts are the loans given by the bank. So here bank receives the interest income. Profit on sale of investments, other income. Rent and taxes, operating expense. Auditors' fees, operating expense. Printing and stationery, operating expense. Income on investment, interest income. Interest on, now again I told you, balance word is used with RBI, so that will be interest income. If they use the word funds or balance income, if they use the word borrowings, then that is an expense. Interest on savings bank deposits. Now this bank has to pay, so interest expense. Then interest on overdraft, that is again an income for the bank. Bank would receive it, so interest income. Balance of profit on 31/3/14. Now balance of profit on 31/3/14, you'll directly take it in P&L account in part 3. You'll directly take it in P&L account in part 3. Okay, what is this? This is the opening balance. All of you can see in the formats what we have done. In that, in part 3, this amount what we had written as nil. Profit and loss brought forward what we had written as nil. That amount in this question would be taken as 50 lakhs. I repeat, in the format of profit and loss statement, in the third part, profit or loss brought forward, which we had taken as nil in the previous question, over there you will be writing this 50 lakhs. I hope everyone is clear with that. Provide for doubtful debts 4 lakhs, that is provisions and contingencies. Okay, that will directly come in P&L statement. Okay, it will not come in the schedules. This one, what we had done in current question also. Provision for doubtful debts. We made workings in the current question, what we solved in the lecture, but here workings are not required. Directly you are given that provision for doubtful debts is 4 lakhs. Provision for income tax to be made at 30%, that will also come in provisions and contingencies. And in the previous question, I explained you how to count this provision for income tax. You all must remember this. I explained you here. How would you count this provision for income tax? Total incomes minus interest expended. Okay, you'll minus this. Minus operating expenses. And then multiplied by this 30%, whatever amount remains. I repeat, total incomes minus interest expended minus operating expenses, and then whatever amount remains in the current question you'll do into 30%. Then transfer 25% to statutory reserve, that even if not given in the question, we have been doing it. Okay, like in the previous question it was not mentioned, but still we transferred to statutory reserve 25% of current year's profits. So this is to be done irrespective of the fact whether mentioned in the question or not. So all of you try this question entirely on your own. First you make the schedules. Here working note is not involved. You make 4 schedules, 13, 14, 15 and 16. And after that you make this P&L statement. In the beginning, in fact, you make P&L statement blank format, writing these particulars only. Then you make the schedules and then you fill up the blanks in the format. Okay, so try this question entirely on your own, every one of you, and answers you will see in the You Will Learn app. That will be all for this lecture. Okay, More questions on balance sheet particularly we will practice in the next lecture. Bye everyone. Take care. See you.